What is up, Hot Take Nation? DRW here, coming to you from San Diego this week. I have had a ridiculous carbon footprint, if I'm being honest. I started the week in Scottsdale. I went through Denver. I went to Oklahoma City. I came back to Denver, and now I'm in San Diego for a youth hockey tournament. Now, why a 15-year-old who's not really that interested in hockey anymore is in San Diego is an entirely different question that we're going to cover on a podcast that is not related to the hot take of the day. But for now, welcome to the show for the week of February 17th. We have so much to cover, and you can probably tell from my voice, I'm a little bit run down. I gave 2 speeches this week. Had a great time in Oklahoma City with everyone that came out for that. As you can see probably from the pictures, people have now learned that you probably don't want to sit in the first table when I'm wearing the Tiger boots, because I'm coming in hot, I'm coming in fast, and I'm coming in furious. And this week I am exasperated about so many things. I'm going to do my absolute best not to rant for the next 15 minutes, but there is no guarantee. So let's start with a story of exasperation. I tried to communicate as eloquently and as consistently as I can. I think everyone knows by now the hot take of the day message is we need to let U.S. production decline both in oil and natural gas. We need to restore balance sheets because this is a crisis of balance sheets. It is not a crisis of low commodity prices. And quite frankly, commodity prices aren't going to change very much. And for 15 months, I have communicated that message in every single way I know how. Live speeches, blogs, now we have a podcast. Every time I talk to executives, I've contemplated doing an interpretive dance. In fact, some people who've seen the speeches probably suggest that it is an interpretive dance that I'm doing while I'm on the stage. But the story that comes to mind as the most equivalent to what's going on is when I was trying to convince about 8 to 10 years ago the life insurance salesman who was also my financial advisor, no longer financial advisor, that I did not need supplemental life insurance. I had like $1 million or something through work, insignificant number because I'm dead, so who really cares? And this person was trying to tell me I needed like double. And I was saying no in every way I could possibly say. And it probably took 4 months of no's. And one day he comes and he says, I really just think you need this product. And I said, look, I am happy to send my kids to college when I'm dead. I am happy to have the house paid off when I'm dead for my wife. But if you think that I am paying for the lifestyle of the guy that's banging my wife after I'm dead, you are fucking crazy. And that's how I feel right now when I'm talking to oil and gas companies. Okay, so let's go to the news from last week. There were a lot of quarterly year-end reports. It's too many for me to go over. The 3 that I really noticed, one of which was Antero. We're going to do a deep dive on Technical Tuesday on Antero. The firm they are the absolute quintessential reason why the gas market is broken. I read their 358-page annual report, sort of 10K filing last night. There are so many doozies in there. So we are going to have some fun, perhaps. I'm not even sure if that's what we're going to call it, but we're going to go to town on Antero. So I'm not going to touch on Antero today. I am going to touch on Marathon, whose stock, after they announced this, went down. And why? Well, lots of reasons. But number 1 was growing oil production next year 6%. And number 2, spending $200 million on their sort of growthy, exploration-y plays. Now, I have no issues with growthy, exploration-y plays. I think we know that we're coming to the end of shale. We're coming to the end of the ability of the U.S. to grow. In fact, I maintain that on oil we are declining. And we're going to touch on that subject in the next month or so when we have the data to actually prove it. But no, Marathon is growing production in oil 6% at a time when the coronavirus has arguably knocked off 500,000 barrels a day. It could have knocked off 1 million barrels a day. And if you read the newsletter from Zero Hedge, which if you think I'm a conspiracy theorist, you got to read Zero Hedge. They are sort of like China is absolute full stop, no consumption, et cetera, et cetera. And then when you add the fact that Libya may or may not come back on with 1 million barrels a day, it feels to me like the world might be oversupplied on oil, and yet companies come out and say, don't worry, investors, we know you've told us not to do this, but we're not really paying attention, either because we're too slow to understand, or because if I don't grow production, my debt blows out of control, and then I have to deal with the banks, and I lose my job, and I make a lot of money, so I don't want to do that. Whatever the reason, Marathon stock fell, not surprisingly, and we don't need more fucking oil. You can hear the exasperation. I've already dropped 2 F-bombs. I really try not to drop F-bombs on the podcast, but I'm in shock. And then Noble, they came out, had about a $1.4 billion write-down on their Eagle Ford gas assets. That's not surprising. They're in the gassier window. As I said in my Dear CDEV letter, I think that Noble is the perfect candidate, and I'm an advocate, a very strong advocate of Noble coming in and launching a hostile merger of CDEV. We're going to come back to CDEV as we circle back. But Noble spends all this time in this press release talking about their great results and their performance, and then production is going to grow year over year, but at the midpoint, and then exit is going to be higher. Like, why are people writing these press releases that A, nobody really cares about? Because words don't matter. It's performance. And B, they're so freaking complicated. You're not telling investors, hey, we are not going to grow production. Here's the financials. Here's our smog. Have a nice day. Talk to you on the quarter. Anyway, I just can't understand it. So, carbon footprint. We started a little bit on carbon footprint. Posted a great post today. If you haven't seen the Quick Dick McDick video, we're going to have it in the show notes. This guy is an absolute Canadian beauty from Saskatchewan. And, I'm making the point because BP came out this week and said that by 2050, that's assuming the company's even going to be around by then. And it's assuming that companies like, if you think about Google, right? Google displaced Yahoo, and now Yahoo is at nothing. So if fossil fuels are truly going away, I don't believe they are. But if they are fossil fuel companies really the ones who should be the ones investing in energy like solar and wind? Sure, they might want to diversify, but diversifying takes away all of the capital that they should be using to develop the assets with the skills they actually have, and applies it to something that's like this whimsical, we can do it better than everyone else. There's a reason that disruptive companies like Google disrupt the entire business of Yahoo, and then Yahoo goes away. So number one, I think BP is making a mistake with this 2050 carbon neutral. We're going to save the world, and we absorb your sins in consumption of our product and the CO2 that you create. We're absorbing that, so we're going to change. Where we have Quick Dick McDick is coming out saying, okay, Greta, and David Suzuki, a Canadian environmentalist who I assume he's talking about in the video I posted the link to, you want to do a vegan diet to make climate change go away? Cool. Where does vegan margarine come from? Canola oil. And how do you manufacture canola oil? All the trucks and the equipment and the farm equipment and the oil and the dryers and the transport and the plastic that you put in the margarine in. I mean, anyway, it's a beautiful video, and my advocacy for the oil and gas industry, I mean, for goodness sakes, Michael Bloomberg is doing memes because he realizes that social media has a powerful voice. And if you can reach out to people and be a little edgy and say, look, climate change people, yes, we understand we're creating CO2, but you're the ones creating CO2. You drive cars which have rubber tires. Rubber's made from petrochemicals. Petrochemicals is oil. Natural gas heats your house, cooks your food, makes your electricity. Like, we got to start pushing back. So that's going to become a really big theme, I think, over the next year for me personally, is really trying to spearhead. We have to push back on this narrative because it's just acceptable that climate change is here, the world is ending. If you just buy some carbon credits, like Delta Airlines, so I had a big carbon footprint this week. I am not contemplating buying offset carbon credits for me. Like, what no one wants to pay more money. Carbon credits are taxes that raise the price of said good so that people use less of it. That is supply demand 101. I understand that most oil and gas executives don't understand supply demand. When you have more supply, prices go down. When you have less supply, prices go up. And in the case of carbon taxes and carbon credits, you buy them to raise the prices on your airline tickets. And you plant some trees and you buy some more efficient engines, because that's why Boeing builds new planes. Otherwise, we'd still be flying the old 737 instead of the 737 MAX. How'd that work out? Anyway, point being, we are a carbon intensive world, and until people realize the only way to fix this is to have less friggin' consumption, and the way to have less consumption is to have less people. I haven't heard Greta out there talking about how we should fly everyone from Wuhan around the world, knock off 100, 200, 300, 500 million people, bring the population of the planet down. That'll lower the carbon intensity quite a bit. How about pension problems? Anyone think about that? In the politically incorrect thing of the world to say, the Wuhan coronavirus has been attacking people mostly over 75. Well, we have a major pension crisis in this country. When 1960 occurred and people were getting pensions, no one was supposed to live to be 82. They were supposed to die already. So, let's have some fun with like unintended consequences of all the things we're doing. We want to save all the people, apply all the medicines, make the world a better place, but at the same time, reduce our carbon, reduce our energy, and not have any trade-offs because it's not going to cost us any money. It's ridiculous. It's a fantasy land. And as Quick Dick would say, it's a land of fairy tales. So, wow, that was a bit of a rant. I apologize, but I'm fired up, boys and girls. So, Extraction, well-known Denver company, and certainly see them a lot in the media. I think the CEO gets the most respected CEO award in the Denver Business Journals, and Wildcatter of the Year, I think, or Entrepreneur of the Year, I think, was an award going back a couple of years ago. And then, as I understand it, and the number might be a little bit wrong, but 80 employees represents about 40% of the staff. One day last week, boom, all gone. And I'm asking myself, how do you not know that you're going to let 40% of your staff go, I don't know, a year ago, if you've been paying any attention to your balance sheet? And more importantly, and this goes for all the companies, not just Extraction, but how are the management teams that have run their companies into the ground with atrocious balance sheets, with bad decisions, and then knee-jerk reactions where they lay off the people who are doing the actual work instead of having faced facts years ago that this is a lower for longer crisis of balance sheets, and management teams continue to have their jobs? It's mind-numbing to me. We're going to do an Extraction Technical Tuesday when they come out with their year-end, talk about where that's going. Lots of rumors swirling. Should be an interesting one. If you didn't catch the CNX Resources one on the newly added Thirsty Thursdays, the interesting thing about that one is I maintain the reason that that investors are not investing in oil and gas is because our stocks are not worth buying in almost all cases. 90 to 95% are overvalued or have a balance sheet that's so atrocious you can't own them. And CNX, company there's no reason for any of you to really know or follow. It's an Appalachia gas player. But they trade about $6 a share. And I walked through the math on their smog, that at a much higher gas price than we currently see today, they're probably worth 70 cents a share in terms of the fundamental NAV. Now, we can talk about long-term resource plays, et cetera, et cetera. But if I'm an analyst working in New York, I just graduated with a $350,000 MBA from Harvard, and I have all this debt, and I'm working in the financial services. I know nothing about oil and gas. I've never seen an oil and gas well. And I look at this, and I understand because I've been reading this Hot Take of the Day guy who talks about smog. And I look at this and I say, CNX shares are worth 77 cents a share. And I go to my boss and he says, should we buy CNX? And I say, no, I think it's worth 77 cents a share. And 3 months later, it goes to $10 because the market is irrational. My boss says, you're an idiot, you're fired. And now I have debt, and now I can't pay my mortgage, and now I can't pay my student loans, and I end up driving an Uber. Not that there's anything wrong with that, but that's what I do. The alternative is for me to say, I'm really concerned about climate change. And God, I just don't think that we can own these companies until they have better governance and better environmental practices. So ESG is the reason I can't buy CNX. And then the stock goes up to $10 and I say, well, it's still ESG. And then the stock falls to 4 cents or 10 cents or whatever it's going to fall to, because fundamentally you can't trade at a value significantly above your net asset value. And then I say, you know what? God, they've really changed their environmental practices. I think I can buy it because I'm going to make money. Because I don't know about any of you. I know a lot of bankers, and I've never, ever met a banker that would not sell their grandma for $1. So I am calling absolute BS on this ESG thing as the reason that people won't invest. I'm calling it because we are not a fundamental investable industry because we don't make any money. Finally, CDEV. So, I've been an advocate of CDEV for a lot of reasons. I think I like their asset base. I like their management team. But at the end of the day, the management team and board doesn't really matter. It's the rock and the balance sheet. That's it. If you have a good rock, good balance sheet, you can do well. But fundamentally, we need to be consolidating as an industry. We have not been, and CDEV is the perfect example of a company that must sell. I've tried to be nice, tried to play a game, but it's not working. So next week, we're going to start pumping out some hashtag merge, CDEV, merge, investor material. And we're going to try and get the old DR Dubs on the board. I'm not really expecting anything out of it. I'm not even really wanting to be on the board because the answer is so very obvious. But the point is, I own more shares personally in CDEV than any of their non-executive directors own personally. And I am very incented to make those shares go up above my cost basis, especially since it's so friggin' logical. Now, short of the coronavirus, I understand we were at $5, now we're at $2.60, and no one should look at short-term prices. But investors want consolidation. The M&A market is not broken. What is broken is the valuation expectations that people think they're going to get. We are never going back to the way it used to be. There's a fundamental NAV, a fundamental commodity price, and you can take equity in a company that is larger to make a stronger, better company, and our industry can survive, because without it, we will die. So that is the show for this week. So many interviews coming up next week. Lots of content. Really happy you joined us today. Until next week, be safe, be good. Have a great week. Bye for now.